Hello, everybody. Can you hear me? If you can hear me, drop 777 in the chat. If you can hear me, drop 777 in the chat. If you can hear me, drop 777 in the chat. All right, I'm super pumped and excited for today's class. Oh, let's go. By the way, before I go in depth, or before we go in depth, I want you to share with me what you've learned so far. Just one per person. And I'm going to take record. Thank God, your course advisor is on this call. So she's going to take record. Just share with me one thing you've learned so far. Just one per person. One per person. Sorry that my voice is a little distant from the mic. I'm trying to set up my lights. Okay? Just share with me what you've learned so far. One thing per person so far since day one. This same program I did, and they all paid $1,000 US to attend, and you're attending for free. So you must learn something. You just have no choice. So share with me one per person what you learned so far. One per person. I'm waiting. Why are we only 16 on this call? One per person, what you've learned so far. So, wow. One per person, what you've learned so far. One per person, what you've learned so far. I don't think this is a great choice. I don't think, if you'd ask me, I think I would even prefer the Windows, using the Windows camera. I don't like the way this is coming out. Okay. This is your first class. Hey, God. You're not been able to join. I wonder why they didn't remove you. Because it's two, once you miss two classes, you should automatically be removed. I don't know why you have not been removed. Maybe it's grace. But that grace will not work this time around. So haven't you watched the recording or anything? Have you not watched the recording? Great and mighty is our God. you hear me now? Okay, can you hear me now? Everybody, can you hear me? Can you hear me? Can you hear me? Talk to me quickly. All right, great. Okay, so we have less than an hour actually. Less than an hour to go through Tradingview and set up our Tradingview. Less than an hour. We have less than an hour, so let's see how far we can go. Let's pray. Our Father, we thank you for help. We thank you for wisdom. We thank you for strength, even at this hour. Lord, we say that as we learn, help us, oh God, that we are transformed. Take all the glory in the name of Jesus, we pray. Amen. 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 So everybody go to trading, go to your Chrome, Google Chrome. Go to your Google Chrome, everybody. Have you opened your Google Chrome? All right, so I'll type something in the chat box now. So you're going to click on it, www.tradingview.com. Yeah, log on to tradingview.com. All right, so click on that. That's tradingview.com. It's going to show you a page. Hold on. It's going to show you something like this. It's going to show you something like this. Everybody, are we on the same page? Are we on the same page? Talk to me, please. Talk to me. Talk to me. Talk to me. All right, great. Sorry, please hold on a minute. I'm sorry. I'm so sorry. I'm so sorry. So we're looking at GBP USD. Sorry. Oh God. TradingView. You're looking at TradingView, right? There's news at 1:30, so I'm trying to finish this class before that time so that I can have a live trading with my team. I want to scalp GBP USD so we can take that huge sell because there's news. All right. So when you open your trading view, it's going to look like this. All right. So everybody, now we are together. I'm sorry for the distraction, but I think it's a good one. So you can see what I'm looking at on GBP USD. So when you open your trading view, you're going to see something like this. Then you click on get started. Get started, everybody. Get started. Now, get started. You're not going to click any of those things. Click on try free basic unless you're not, unless you are ready to pay to start using TradingView. Then you sign up using your Google account. I have 2 TradingView accounts already, so I don't think I want to do this. But let's just do this for the sake of the class. So let's open one with so we pick a photo. Just pick a photo. Any photo actually. Size is too big or more. And then I'll pick thank you, Father. Size is too big. Just pick a photo and use just what are we going to do now? Photo library. Which photo are we going to use now? Size is too big. Or more. What are we going to do now? Size is still too big. You can't find get started. Okay, let's start from beginning. Someone said you are lost. Oh wow. Okay. Tradingview.com. Together now, everybody, let's go. Click on tradingview.com. I've started already. That's why you showed me this. But you see something like get started. Samuel Jaga said scroll down. So try and scroll down if you see it. All right. So just pick a photo. Any photo works actually, but this size is too much. So I don't know what we're gonna do now, man. Because all these photos, their sizes are crazy, bro. Thank you for saving me. Thank you, my Lord. Okay, maybe this one will work. So I just pick the photo. Then opt out from marketing emails. Then continue. So now we have opened an account. All right. We have opened an account. We don't want to buy anything yet, so just ignore. Then now what you want to do is click on products. Products. Click on charts. Are we together? Click on products. Click on charts. Click on products. Click on charts. It's bring out something like this. Everybody. Click on product. Click on charts. Click on products. Click on charts. Click on products. Click on charts. Look at now, this guy's buying now. These guys are not, they're talking rubbish. Clean by here. This sale will not hold this other block. It will clean it. It's liquidity. All this liquidity will clear off. Market will clear the liquidity and come up. I know that for sure. I know that for sure. Let's see. I would like to enter after it breaks out of it. So I said, click on products, click on charts. Can't find the get started. Scroll down. If you're using your phone, scroll down. If you're using whatever you're using, scroll down. Just scroll down. I'm using an iPad. iPad can be both a phone and a laptop. That's why I'm using it. I've used my laptop. But some people will say they're using phone. That's how I use iPad. At least that's the feel of both a phone and a laptop. All right. So if you're on this page with me now, say yes. We don't have time. Actually, we have less than approximately 20 minutes. Network took me out. Oh wow. Thank God it's recorded so you can rewatch it. But click on tradingview.com. Click on get started. Or if you don't see get started, you see something like an icon of like a face or something. All this login that is right. So click on it. Just click on something, anything actually. Click on something, anything actually. Click on something, anything actually. Just click on anything. Click on something. Click on something. Are we together? Please, we don't have time, please. Are we together? Okay, contact icon by the top right side. Amazing. So now once you do that, what you want to do next is you see your screen like this. Click on this volume icon. Volume here. See volume here. Can you see volume? Just see volume towards this side here. Above. Look above. Choose a plan. Don't choose any plan. Click on try free. Don't choose any plan. Annual or monthly, unless you're ready to pay for it right now. If you're not ready to pay for it right now, don't click any plan. Then so where was I? This volume here. See the volume I'm looking at. Oh God, what's all this volume? So that volume now, what I want to do is to take it away. You don't need all those indicators. So take away the volume. It's not where I picked the volume. You can't see the volume. It's okay. Let me go back. So let me draw it like. See volume here. This place I'm drawing now. See volume. Above. Volume here. Can you see it? So that volume, see it there. Click on it. Click on that volume. Then when you click on the volume, cancel it once you click on it. Once you click on the volume, cancel it. Please, we don't have time. Please, let's be a little more active. Cancel the volume. After canceling the volume, what you want to do next is look at this panel here. This panel here. If you can't see it on your phone, then maybe because you're using a phone. I usually advise people to use their laptop because it's better and faster. But if you don't have a laptop you're using right now, you're using your phone, then just I don't know. You don't know where we are. Oh wow. Okay, you know what? Those that are using phone, hold on. Those that are using phone, hold on. Those that are using phone, hold on. You guys are dragging us back. Just hold on. We're gonna help everybody catch up. What you want to do now is those that are using laptop, let's do this together. After you can't see the volume, hold on. Those that are using phone, hold on. I'll come to you. Those that are using laptop, let's do this quickly. If you don't understand, then you have to rewatch the video because this is how it is on your laptop panel. So you just have to follow me. This thing, you see the gray line. I will explain it. Ahead, the gray line that is just above this AAPL. That gray line, just hold. Once you click on the gray line, drag it down. I don't have a mouse there. I would have shown you, but this thing now, you drag it down. All right, so you just click on the gray line and drag it down. Then next is, for now, you're not going to trade all this US oil, gold, silver. So just cancel. See how to cancel stocks. You're not going to trade stocks for now. So cancel them. Just cancel them. You're not going to trade indices for now. Cancel, 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 cancel. But don't cancel DXY. We need DXY. All right. Don't cancel DXY. You're using a laptop. Then try to catch up, please. Try to catch up. Excuse me. Wow, see this baby boy is tanking. So just cancel all these things. You're not going to use them for now. All right, cancel them. Unless you think or you think you can use them. Just cancel all of them. Stocks, cancel. You're not using them right now, so cancel them. Then this is what you want to do. After I have canceled all of them, I hope you're on the same page now. After canceling them, what you want to do next is come to, let me give you my own panel now. So just look here like this, right? Just look here like I did mine. Look here, and then all these currency pairs that I have on my own place, just duplicate them. Whether you trade it or not, just duplicate. So I have foreign currencies, the currencies that I trade. I have 2 GBP USD because I trade GBP USD a lot, right? So GBP USD is one of the most volatile pairs in the markets. That's why I trade it. Very, very, very risky to trade, but that's why I trade it. So pick it, right? And then let's go. Wow, I like this particular buy order block here. Like, it's so clean. Tell me what will make it not to stand. Look at this other block. Clean baby boy. Like, bro, I like this. Buy it from here again. I like this. So just copy. How do you add to your watch list? Great. So now let's add. Let me expand it so you can see what I'm showing you. Just finish opening an account with my phone. Okay, then you hold on. Okay. So I've expanded it so you can see what me I'm looking at. All right. Then what you want to do, just like I'm doing here, come here, click on these 3 dots here. See these 3 dots, click it, then write add section. On this cryptocurrency, double tap it and change this from crypto to cryptocurrencies. Change it from crypto to cryptocurrencies. Then Forex, just like, yeah, I prefer foreign currencies. Right? And then remember that on mine, I have, let's copy and paste. Okay, yeah. On mine, I did something. I took away the change. So I only left, these are the only things I left. The last price, change in volume, then logo. I took mine away. If you want to leave yours, no problem. Ticker, just leave it. Okay. Then please follow me, or those that are using laptop. Or what you want to do next is the watch list I have. I have Euro USD, I have Euro GBP, I have GBP USD. So the watch list I have, let's even divide the screen into 2 because we can do it. Okay. So now this is the watch list I have here. We are trying to copy and paste the watch list. I have GBP USD here. Okay. I have GBP USD here. So you too, you want to copy and paste my GBP USD. All right. You want to copy and paste it. How do you want to do that? It's very simple. Just click on that plus. See this plus here. This plus above. So click on plus. Then type Euro GBP. Yeah, you want to add. I like FXCM. Right. So click FXCM. Then click on it and drag it up. Do you understand? So you right click and drag it up. All right. Right click and drag it up. GBP USD also. What exchange is this? What exchange did they give me GBP USD with? What exchange did they give me this guy with? Let me search this BSD. They gave me FXCM also, makes sense. What of Euro USD? They gave me FXCM, perfect. All right, so next you want to add NZD USD. This is just like copying and pasting what I do, all right? But guess what? As you go in depth, you need to pick a niche by yourself, right? You need to pick a niche by yourself. And picking a niche is now where you have to study all these currency pairs and know the ones that you like, know the ones that you don't like, and just basically copy and paste. Zoom user, I'm sorry, I have to remove you. I have to remove you from my class now because I've told you to always connect using your name. So Zoom user, I'm sorry. When you want to connect again. Okay, let me give you 2 minutes to change your name. If you don't change it in 2 minutes, and I'm sorry, I'll remove it. Thank you. So that's what you're gonna do. All right. Basically, add NZD FXCM. Once you've done that, cancel. Same thing, drag it up. All right. I like my own alphabetical order. So E, then G, then N, then U. Right. Then for cryptocurrencies, BTC, USD. I like Bitstamp or Bitfinex, any of them. Basically, just pick Bitstamp. So what you want to do is put the volume, take away the last price. So the volume shows you how many people are in the market right now. So this is 305,000 people on GBP USD JPY right now. It changes per second because more people come in, more people go out. So 305,000 people are actually trading this currency. They're on a trade on USD JPY right now, or they're looking at the charts on USD JPY 305. So it changes per second, like every single second. It just volume basically, right? Then you can add ETH USD. Or if you, no, I don't think you need to add ETH because I don't even do ETH like that. I just analyze it for the other guys, not for myself. I don't trade Ethereum. Then indices. So now this is the thing. Here's the thing, right? For these indices, you need to be a little more careful, right? Because it's more volatile than any other thing. Indices is very volatile. So you can pick Pepperstone, you can pick Oanda, you can pick Black Bull. Anyone works. Well, let's pick Black Bull. All right, so that's indices, then US 30. Sorry, US 30. Please just ASAP, those using laptop, Black Bull also. All right, or Capital Com, any of them. Why do I pick some exchanges? Because they give us different values every exchange. But I pick exchanges that the value is in line with what I'm seeing in my MetaTrader 4, so that I know that, okay, just like, let's say 5, and it doesn't change. It's just 5. The spread is 5. So I know that, okay, well, that is the spread, and that's what I'm doing. If you're trading on Binance, then what you want to do is just pick Binance, because Binance also have their own exchange here. So just pick Binance, so that we don't have to calculate spread. The same thing you're seeing here is the same thing that will be on your Binance, okay? Basically, we have set up our watch list. This is called watch list, by the way. So for those of you that don't know what it is, this is watch list, and this is where you locate it. So watch list is like the currency pairs that you trade off on. Just want to keep them within your reach, so you don't have to be searching for them every single time, you know? What else? Then alarms. You can only set one alarm because you're using free version. Headlines. I don't look at all these ones. These are news. You can look at them if you want, but me, I don't. Then something very important I want to show you. And there are all this logo you're seeing below. You can decide to take them away, or you can decide to leave them. All right. Me, I took them away, but you can decide to leave it. What it does is it tells you, it shows you news, right? News, like no news move the markets. If you don't understand that, tomorrow's class on fundamental analysis, you're going to understand why news moves the market, okay? So it shows you the news that is coming up. So any red folder news is a serious news, like very, very, very serious. That's high impact. Orange folder is medium impact. But that one, we'll look at that one tomorrow, not today, okay? So basically, I think that's all for that. The next is by your far right here. All of these things you're seeing here, by your far right here. Your far right wants to do something. Your far right wants to do something. But your far right wants to do something. So see mine, right? All these things that I've highlighted, go and highlight your own. Same thing. Trend line highlighted, arrow highlighted, ray highlighted, horizontal line highlighted, horizontal ray highlighted, parallel channel highlighted. Then next year, Fibonacci retracement highlighted. Next year, okay, brush highlighted, highlighter not highlighted. Wow. Please just let's do this together, okay? So if you don't know what I'm highlighting, just take a screenshot and quickly do yours or rewatch the video. Remember, we're working with time. So rectangle highlighted, path highlighted, then next place, text highlighted, next place, none highlighted, next place. Okay, long position highlighted, short position highlighted, price range highlighted, nice. Fixed range, volume profile highlighted. All right. So we have highlighted all of these stuff, okay? What are they used for? Good question. You know what they are used for later in your Tradingview journey. I can't tell you everything about Tradingview. Tradingview, you need to find out by yourself. Honestly, don't let anybody deceive you. I'll teach you everything about Tradingview, bro. You need to go and research and find out by yourself. Okay. The only thing is there is a guide, and that's the guide I've given to you today. All right. There's a guide, and that's the guide I've given to you today. What else? Oh, this is what a long position and a short position is. Well, I'll explain that some other day, not today, definitely. The next is on my time frame. This is where yours is. That D that you're seeing. Pick that D, click it. That D, click that D. Not that D. Oh, wow. Zoom user did not still change his name. I'm sorry. I'll remove you right now. I'm sorry. Okay. No, I'm not reporting you. No, I don't want to report you. I just want to remove you. Why can't I find the Zoom user again? Okay, I've removed you. Okay, great. So I highlighted 1 minute. Just highlight what I'm highlighting. But you might not understand how to use 1 minute. So you might choose not to highlight 1 minute. But highlight it, you will learn. Highlight 1 minute, 3 minutes, 5, 15, 30, an hour, 1 day, 1 week, 1 month. You see, I told you our class by 12. I know they're calling me already. I just wanted us to finish this quickly. Class by 12. Okay, let's see. You can highlight 2 hours, but you can't use 2 hours chats because you are not using what they call it. You are not using Tradingview Pro. Oh, you can. They allow us to use it. To Jesus, wow. That means Tradingview just changed their settings because before you can't use 2 hours candle, right? So they just changed it. Well, I think I love this now. So 2 hours gives us a clearer view. Wow. So I will stop using 30 minutes time frame if that's the case, because I think I prefer the 2 hour time frame. So you can remove 30 minutes time frame. I just removed mine because I prefer the 2 hours. All right. So for those of you that don't understand what I'm doing so far, I'd advise you to stay, watch. If you don't understand after the seminar, right, you'll watch it. Okay. Basically what all of this does is one candle. If you click D means 1 day. So one candle is 1 day old. One candle is 1 day old. During the class, I'll teach you candlestick anatomy. Okay. So a red candle starts up, ends down. A green candle starts down, ends up. Are you with me? So a red candle started here. This week means that at some point it's made its way up here. Then it came down here, made its way down here, then closed above, a little above where it got to down. All right, so that's just what it means. Let me just draw the illustration. Excuse me. So this is a candlestick. If this is a red candle, this is a sell candle, right? A sell candle. Sell candle means open here. Highest point, close there, lowest point. All right. Then if this is a buy candle, open, lowest point, close, highest point. So meaning if you look at it on the chart, if you now break this big candle into smaller candles, you might see something like this: small candle here, that made its way like this, came down here, then made its way up here, then came across. In the candle, it did many things, like it went up first, then came back down to touch this lowest point. They went up all the way to touch this highest point, then came and closed on this place. I don't know, do you get what I'm saying? All right, if you understand what I'm saying, I think that makes some sense. So basically, you would understand better as you proceed to learning, right? Then there's a particular video I recommend you watch. Let me just go to the video at once. So on YouTube, the video is by Renatio. Well, let me start Renatio Tradingview tutorial. That was what I watched like some years ago that gave me an insight into Tradingview. Yeah, he did the video 2 years ago, right? So you can just watch this whole video, this whole series. Let me even share. Copy the link and then I'll share. Okay, so I'll share to the WhatsApp group. So I'd recommend you watch the video. It gives you like a clearer insight into the things I'm trying to say, okay? Because I definitely can't go through everything here now. Okay, so I'll just show you what each of these tools are used for. Now let's go back to each of these tools one after another. These tools I told you to highlight. Now, what are they used for, right? This is a trend. This is called a trend line. That thing I just picked, the first one we picked. So trend line, you can pick it from point A to point B, right? So basically, for example, you want to connect this high to this high. That's a trend, okay? So you want to connect it, meaning price respected it. So whenever price touched it, price ran out. That's a trend line. And guess what? In the future, this trend line does during is still valid. If at any point this price makes its way up here, it might fall down. Or touch it, fall down for a moment before it goes up if you want to change this trend, right? But right here, we are seeing something like a double bottom. Double bottom means that the price will start buying soon, or I've even started buying, but I'm not here to teach you that. So that's what that is used for. This is an arrow used to show direction. So this is an arrow, right? And this is a trend line also, but it's like takes it to infinity, so it doesn't stop. So if you're drawing a trend line, look at it, won't stop. It just keep going like that. Or let me draw its opposites. Right, so this one now, if you keep scrolling, you keep seeing it can't stop. it can't stop. So I use that one to draw a trend line if I want to predict what the future will do. If the red candle is for buy, what is the green candle? Red candle is for sell, green candle is for buy. But you can change the color because I'm going to change the color now. So it's not the color that determines it, it's the direction. Like it came down, so it is selling, went up, so it is buying, right? Then this is horizontal line used to show, like to draw an horizontal or to make an horizontal highlight, okay? Then this is also horizontal line, but this first horizontal line takes it to both infinity backward, infinity forward. This horizontal line takes it from where you are right now to infinity forward only. It doesn't consider infinity backward, all right? Then this part, like basically connects a part. Let me show you for example. Now look at like connects a part. Let me give an example of what I'm saying. Like here now we see something like a part being created when market price continually ranged around that place, okay? So that's like a part, if you want to draw it. So that part, what to confirm a sell is when market breaks out of the part. It confirms a sell. What to confirm a buy is when market breaks out of that part, okay? So part like shows you, is this for either sideways ranging market or horizontal ranging markets? You can't find a ranging market that is vertical, no. It's either ranges sideways or ranges horizontally. I don't know if you get what I'm saying. It's either ranges sideways or ranges horizontally. So basically that's what the part is. The Fibonacci retracement, I'm not going to explain that now because I'm having a special class for Fibonacci. Fibonacci is one of my greatest strategies I use in trading, right? So for example, Fibonacci drawing from the swing high to the swing low. And now what happens? You see that when market got into between the 618 and 786, what did market do? Market fell down back. So that's an entire strategy I'll show you, honestly. So I'll not explain that right here. I'll have a special class on Fibonacci. Then this brush is just to like make an highlight. For example, I'm highlighting this swing high. Okay. So basically that's it. Then this other one is to draw out a zone. So when I do my analysis, I want to draw out my zone. So this zone means when market comes into this zone, I would like to buy aggressive. Basically, that's just what it means, okay? What else? This part, exactly. So this part now might mean that I'm saying when market comes down here, I'm going to buy it up here. Then it's now sell down here small. Then now buy up here small. So the part basically is like you drawing line, but continuously. Like you're drawing a line, like you're trying to show a path, right? So you're trying to show a path from where market is to what you think market will do. Okay, so that's basically what path is. Then text is when you want to write a text. Like if I do my analysis, I can decide to keep a text inside this zone and say demand zone. Demand zone. I can increase the text size and write okay. All right, so that's demand zone right there. I just kept demand zone there. Okay, so that's basically what text is. This long position calculates my risk and my reward. So imagine I'm willing to buy all the way to the market gets maybe here or up, but let's say I'm willing to buy here because I can see another block above, right? You might not understand what that block is right now, but you understand later. So imagine I'm willing to buy up to this point, last buy candle before the massive sell, or last buy momentum. So unless I'm willing to risk, let's see, this is the entire zone where I expect market to move out from. So I put my stop loss a little bit below. You understand what stop loss is from our class yesterday. So let's say I put my stop loss a little bit below. Let's just keep my stop loss here, right? So for this, I'm saying I'm willing to risk 47, this 47.0 that you're seeing, 47.0, stop 47.0. So I'm willing to risk 47 pips to get target 296 pips. Do you understand? Meaning I'm willing to risk 47 pips to get 296 pips. If I use one standard lot, or Please, Emperor David, would this class be available to watch later? Because environment and equipment factors are available. Okay. Yes, I'm recording it, so I'll post it on YouTube. But you need to also be here, like to like double confirmation for what you're saying and for what I'm saying. Okay. So 296 is basically like your take profits. Okay. Remember we talked about take profits yesterday or 2 days ago, I think. While your stop loss is going to be 47 pips. If I now use, let's say 0.10, that's $1 per pip move. So I'm getting, if I have $100 and I put 0.10, which is not right, I'll lose $47 if market goes against me. But I will gain $296 if market goes in my favor. Do you understand? So you calculate your risk, calculate your reward. Then it now gives you your risk to reward ratio. See risk to reward ratio, risk/reward ratio, 6.3, meaning 6.3 is your risk to reward. That means if you risk 1% of your account, you're going to get 6% at the end of the trade, which is very, very reasonable. If you risk 100%, you're going to get 600%, which is very reasonable if you would ask me. Okay, for an investor. Then sell position to same thing. Imagine you wanted to calculate your risk here, and you say, okay, because of this particular reaction I'm seeing here, I want to sell immediately. Market taps this zone. That's this entire zone. And remember, there's like a trend line there. You say I'm willing to risk only, let's say 20 pips, and I'm willing to ride it down up to, let's say, this point, this other block here. Okay, let's say you were looking at this other block. Let's assume that you were looking at this other block. Okay, let's assume you're looking at this other block and you say you're willing to ride it down up to this point, right? That means you're going to risk 20 pips to get 175 pips. And guess what? Market did it. So you risk 20 pips, your profit was 175 pips. Meaning if you risk $20, you get $175 as your reward. Sorry, hold on, please. All right. Sorry about that. I always tell you, right? Family first. So, family before even business. So, I'm sorry if you're offended at the heart of terms of family. Okay. So your risk to reward on that particular trade, this trade that we are looking at, your risk to reward was 8.6. Meaning, if you risked, let's say you risk 10%, you get an extra 80%, right? So $100, you get. Can you hear me? Let's say you risked $20, you got $175. So if you risked 10% of your accounts, you got 80% extra profit. And if you'd ask me, that's mind-blowing. Honestly, if you'd ask me, I think that's mind-blowing, all right? So that's, then this price range, right? Price range, it shows you how price rallied all the way, how many pips price moved. So from that zone to this zone, we got 408 pips, like crazy, you know? That's crazy if you'd ask me. That's price range, all right? Then this other one it is actually an indicator on its own. It's called fixed range volume profile. Fixed range volume profile. So it shows you where the volume, or where traders came into the market the most, or where traders are right now, where there is most volume. Let's say we are picking from that place to where market currently is. So just wait a few seconds, see where traders are. Do you see what it's saying? It's saying that's where traders are, meaning traders wants to sell. Traders are above here. So from this indicator already, we have seen that Okay, let me remove other things that I kept so that you'll be able to see it clearly. Because this is something that you need to pay attention to very well. All right. So from this indicator, you have seen that this is where traders are. This is where the volume is in the market. All right. So most traders are waiting at this higher point. And what do you see at this higher point? You see an order block. I don't know if you get what I'm saying. You see an order block. So traders are waiting for price to make its way up here so they can sell. So the indicator basically shows you what price is more and where traders are. All right. Where traders are right now. That's what the indicator shows you. We are traders right now. Where are traders right now? Where are traders right now? Okay. And remember, in our course outline, we agreed to study on very important things like charting tools. I've shown you that already using Fibonacci. Okay, I think I will explain Fibonacci now. I didn't plan on explaining it now. Then indicators, EMA, ATR, RSI, Stochastic. So let's start from Fibonacci. So let's start from Fibonacci. I'll clear out all of this. Then we'll now do Fibonacci. This is Fibonacci here. This is Fibonacci. Look at Fibonacci. That's thing I picked. So Fibonacci, you draw it, just draw your Fibonacci anywhere first for now. Excuse me. So like for now, just draw it anywhere. Then click on these settings. Please pay attention, everybody. Then now we're going to remove 382. We're going to remove this one. We're going to remove 3.1, 4.1, 2.1. Then we're going to change the color to white, right? Then we're going to change the color of number 1 to gray. Please just do as I'm doing, please. Change the color of number 1 to gray, color of 0 to gray also. Okay. Then click on OK. Oh, that's not what that's true. Then come down, remove price. Then for background, bring the background to 0. And click OK. Then you will not be able to see anything on the screen. Why? That's because we have not changed the background of our screen. If you like dark mode, click on dark mode. Like me, I love dark mode. So I think I'm okay with dark mode. So this looks like what I'm going to like to trade with. Then you click on the candles, click on settings, candle body. For green, remember green is the buy. So I want to use white. Anywhere I see green, I put white. Anywhere I see green, I put white. Then the body, I want to put this bright red. So I want to use white and red for mine. Then I click OK, you know. So now it looks more like it. And we are not done. That's true, we are not done. Click that same settings. You can click on the settings anyway. See it above here too also. It's like see settings here. Click on settings, click on appearance. All right. Then grid vertical lines. Bring the opacity to 0. Grid horizontal lines, bring the opacity to 0. Click on OK. So now your chart looks like my chart. So clean and interesting, all right? So now, why did I mark out all of those Fibonacci zones that you saw earlier? I marked them out because they are basically not useful for the sake of this analysis, okay? They are not useful for the sake of this analysis. What is useful is what I'm showing you. And usually, this is your, okay, let me just show you now. Let's assume now. Let's assume that we didn't know that this way, all of this thing. Let's use the replay button. Okay, so now look at me, please, everybody. Look at me. All right. So now let's assume that this is where price is. So we don't know what price we do. We are just trying to guess. All right. Oh, that's true. I forgot to add that you take away 0.5 also. I don't look at 0.5 because that's, see, what does it mean? All these 0.1 thing. Can you pick the icon again? Fibonacci. Okay. See Fibonacci here. See Fibonacci by your right. I'll be your left, rather. Okay. So, hold on. This 786, I forgot to tell you, edit it, change it to 79. This 0.38, open it and edit it, change it to 886, 0.886. I forgot to tell you that. Then this 0.2, open it, change it to 0. Let's say 705, 705. Okay. So now all of these things that we have done now, right? All of these zones are important zones. But me, I love, want to sell. The market is downtrending, right? The market is going down. You always want to sell at a high price. You don't want to sell low. You want to buy low and sell high. That's always your target. Buy low, sell high. That's always your target. Buy low, sell high. So in order to buy low, what you want to do is, where do I think this market will retrace from? For example, if you're picking this first side now, this is our swing high. You might not understand what swing high is. Swing high is like the highest point of a downtrend before a break of structure. Oh God, you might not understand break of structure. Oh God. With time you understand, don't worry, with time. Basically, when I say break of structure, this is what I mean. This is some market doing low, high, then this is a lower, this low is lower than this low. This is one low, remember. This low now came lower than this low. So break of structure is when market broke below the previous low in a downtrend or break above the previous high in an uptrend. So this is a BOS right now. BOS, I mean break of structure. Same we see here, break of structure to the downside, okay? So immediately after the break of structure, you now draw your Fibonacci. Immediately after the break of structure, you draw your Fibonacci, okay? Like, that means the market is already going down, right? But now, market has broken structure, so where will it retrace to? Or if not immediately after the break of structure, you're looking at break of structure have occurred. So I want to draw my Fibonacci. Same here. And we see a lower low created, and we see market broke that lower low. So after breaking it, I want to draw my Fibonacci. Where will market retrace to? Same here. This low was broken. Okay. So, like, market has broken that low. What do I want to do next is to draw my Fibonacci. Same here. Break of structure occurred. All right. Break of structure occurred here also. Okay. Break of structure is when a lower low is broken, or that's in a downtrend, or in an uptrend, a higher high is broken. I'm sorry, I'm so hungry already. My head is aching. I'm hungry. Like, I want to eat something. I feel so hungry right now. I'm sorry. I'm so sorry. So sorry, guys. I feel so hungry, man. We need to end this class urgently. I need to eat something. My stomach is like choking me. Okay, so where was I now? So after the break of structure, you're going to draw your Fibonacci. I like this particular one I'm seeing here now. Look at this. Look at this. This particular thing I'm showing you now, we'll study it in the technical analysis class. This is called order block. So supply zone. I'm a supply and demand trader. So after this break of structure, like I said, let's pick this side now. This is a higher high. You now draw your Fibonacci from your high to your low. And it shows you where markets will most likely pick from. So you're trying to sell high. Guess what? Guess what? Just guess. Sometimes you can even sell higher than the previous high, but it's not always advisable. You usually want to sell. Let me tell you the places you want to sell. When market comes up, you want to sell either at 705, 79, or 886. 618 also, you can choose to sell from there, okay? But you don't pick Fibonacci as an independent indicator without confluences. So I trade Fibonacci with other confluences. One confluence is this other block I just marked out here. You can change the color of this to white and white since we have changed our background to black. So one confluence I'm seeing here is this other block I just saw. That's the last buy momentum before the massive sell. All right. But you understand that in another class. Guys, I need to go and eat. Shit, my head. Oh, God. Sorry, so sorry. Then that's one confluence. Second confluence is the Fibonacci area is lying above the 886. So that's like premium. You want to sell at a premium and buy at a discount. Pay attention to this. I think you need to write it down. So you always want to sell at a premium, buy at a discount. You always want to what? Sell at a premium, buy at a discount. You always want to what? Sell at a premium, buy at a discount. Buy at a discount means buy at the lowest price possible, sell at the highest price possible. Okay. So here now, I would have sold at the 886. If I sold at the 886, why did I sell at the 886? Let's use the replay button again. Let's use this replay function again now. So if you're using the replay function now, I'd have sold here. Why will I sell here? Because number one, please pay attention. Number one, I'm seeing that this entire zone is an order block, right? This entire place is an order block. Number two, that other block is lying in 886 Fibonacci. Okay, so that's like a premium. I'm trying to sell at a premium. All right. So while selling at a premium, I would just keep my stop loss a little bit above. So now I'll do something like this. Please pay attention. I'll do something like this. I'll put my sell order here. I'll put my stop loss a little bit above. Let's say just a little bit above it, actually. Then my take profit now important. My take profit will be sorry, I did the wrong thing. I'm not supposed to open up this. Okay, if I'm opening up, I'll open it up as minus. So edit it, change it to minus. Minus. Please edit it, change it to minus. Minus. Exactly. Minus. And even open up another one and change the other one to minus. So I'll put minus 0.27. Or let's say minus 0.5 or minus 0.38. Perfect. Minus 0.38. So usually this is your entry. That place you just marked out. Let's edit this, change it to white. The text, change the text to black. This, change it to bright red. Yes. Then now, that is my entry. My take profit 1 will be this previous flow. 1. Take profit 2 will be 0.38. 2. Take profit 3 will be what? Will be 1.68. Actually, it's too far, right? 1.68 is like so crazy. It's too far. Let's put 1, just minus 1. It's too far. 1.68 is like too far. Okay, unless you have that tenacity to hold the trade for so long. So my take profit 1 is this, take profit 2, take profit 3. Okay. So now, all of these confluences were because I saw in my Fibonacci and in my other block that price was lying down in a zone that is good for me to sell. If you honestly, be honest with me now, if you don't understand what I'm saying so far, put no. Be honest with me. If you understand to an extent, put maybe. If you understand perfectly, put yes. Please do that now, everybody. If you understand to an extent, put maybe. If you understand perfectly, put yes. If you don't understand at all, no. No, maybe. No, maybe. Okay. So great. This is actually what we're going to do. Because I'm honest with you, I'm very hungry. Like very, very hungry. And when I'm hungry, I don't know if you even understand what I'm saying. So what we can do now is this, all right? I'm going to, for the sake of this, we're going to like have this class again, all right? Maybe this evening or tomorrow morning. But then when having the class again, I'm gonna have this class again, all right? But then when having this class again, sorry, when having this class again, I'm going to send you on the group two videos to watch. Okay, so after watching those videos, right, we're going to have this class again. So in the class we're going to have again, the only things we're going to talk about are Fibonacci and indicators. We have set up our trading view. Those that are using phone, all right, those that are using phone. Okay, in the next 5 minutes, can we do that in 5 minutes? I doubt we can do it in 5 minutes. So what happens is those that are using phone, if you have not set up your trading view yet and you're using phone, please put 111. Just type 111 quickly. If you have not set up your trading view and you're using a phone, put 111. You have not. Okay. So you're quite a number. All right. Oh, we are plenty. Jesus. See 111 everywhere. Again today. I'm not teaching again today. I need to rest. My head is aching. And I'm hungry. I don't know. All right, can you hear me now? I left with my device. This is what I was connected with on my audio. All right, so I said this evening when we're going to have the class again, then we'll set up our trading view. I promise you that. All right, so those that are using phone, please, this evening. I can't continue again. I can't, so please. I'm so sorry. Don't like me, oh. You know that I love to sleep. I can't keep myself right now. I've been up since early morning. Like, I'm tired already. I need to eat. I've not had breakfast, nothing. So I need to pray at it. So this evening we'll have a class. Set up a trading view. Those are using phone, but those are using laptop and iPad, I believe are all set up a trading view. They're quite a lot, right? So they're going to like have the class in the evening and do the Fibonacci also. So in the Fibonacci class, I will be more settled, I believe. All right, I believe I'll be more settled. I believe you would have watched the video I'll send to the group. I'll send the video to the group shortly. So you go through it, all right? We're going to have our class at the time after you're going through the video. Just the class is only how to use Fibonacci, all right? So please take care of yourself. You're going to have that class after you've watched the video, remember. Thank you so much. I'm sorry we have to end this class now. I'm so sorry. All right, I'm so sorry.